Hello, and welcome to the market update for Tuesday, September the 28th. Obviously, a big down day today, but it's something that was it concerned me a little bit a little over a week ago. If you remember in the update when we had the last sell-off, I was concerned because the sentiment of the market didn't drop very much, which meant that there were still too many people that were too bullish. And whenever in that type of market environment, you have to be worried that a day like today is going to happen. We started to rally. It looked like maybe we could get back to breaking out to all-time highs again, and then suddenly we get this sharp sell-off. And from what it looks like, we'll look at the charts here in a second. But it looks like there could be some more downside, and I think a lot of it could have to do with that elevated sentiment. Those sentiment levels probably need to drop a little bit more. If we look at the direction alerts here, you can see this is probably the best one to see it here. You can see that the blue line is the sentiment. The sentiment is still elevated. You have momentum that's really crashed. It rebounded a little bit, but it dropped dramatically. Breadth has dropped pretty strong, but the sentiment is still high, which means that it's possible we could get more downside here. Now, again, I still don't see a situation where we're going to get a collapse or massive sell-off. That's always possible, though. But I don't see anything just yet that would indicate that's going to happen. Now, you can see momentum here has dropped back. We had that strong rally over last week. We came off those lows, but we pretty much wiped that out with today's move. The slide bar here, or the on the breadth indicator and the sentiment indicator isn't showing up. Usually when I refresh the page, they'll come on there, but they haven't. That's why I was using this one right here to kind of show. You can kind of see it from here that those levels, they've backed off. Breadth is backed off, but sentiment is still in that high range. It's still elevated. Now, if we look at the buy-sell ratios, we can see that the sells have come back. This will update overnight, remember. But with last week, we saw the buys increase, the sells decrease, and they're starting to cross right here. We'll probably see the sells spike up a little bit and the buys drop with today's move. Now, the buy-sell ratio of the overall market is still above 1. It's at 1.18. That'll likely drop, possibly below 1 when this updates tomorrow. We're at a 2% drop in the market, so it's a pretty decent drop today. But I didn't see a lot on the individual stocks that I really wanted to get into, and with the potential for more downside. A lot of it's going to depend on how we close. If we close near the lows of the day, I would definitely believe that at the very least we're going to open lower tomorrow, but there's probably more downside. But I didn't see anything I wanted to get into today except for possibly getting into one of those inverse ETFs. We'll look at that when we get into the portfolio here in just a second. But I think there's a good opportunity to take advantage of those inverse ETFs, so the inverse index ETFs. If the S&P 500 is going to continue to drop, this could rally, and it could be a way to kind of hedge the portfolio a little bit. And to make a little bit of money with the market dropping in that portfolio. But we'll look at that here in just a second as well. Sentiment had dropped. We rallied back up a little bit. This is probably going to drop down today, drop down a bit lower today when this updates overnight. And but again, we're not in any sort of overbought condition. In fact, we were recently in an oversold condition down here. And so, once the market is done selling off, it's going to be a great opportunity to ride the trend back up again. But I was hoping to have a little bit more of a cash position when we bottomed out. I thought there was a good chance we had bottomed out with the move last week, at least the way the market was behaving at the time. And let's get to the chart here, because I want to show you this, what can sometimes be difficult in reading the markets. We can never know exactly what the market is going to do. There are clues. I try to teach those clues that you can look for that can increase your probability of getting that trend direction right. But the reason why the market works and why no one can ever perfectly predict the market is because there's so many variables, and it doesn't always behave the way we expect it to behave. And that's why it's very important we understand what we're doing is trying to increase probabilities, not be able to perfectly identify what's going to happen next. But what I was concerned about with the sell-off last week, and it kind of peaked there on that Monday, was that it looked like kind of a straight move down. So we had kind of this impulsive move down. We had gone to a lower low right here. So we had kind of broken that uptrend that we had been in with the higher highs, higher lows. But then after we had the bullish reversal day right here on Monday, came off the lows of the day. And again, that's one thing we'll look at the close and see if that happens again here. But and then we had a very sharp rise over the next few days. Typically in corrective moves, when you're in a downtrend, typically they'll be a little bit more sluggish. You'll get an initial move, it'll kind of drop a little bit, and you'll usually get a real sluggish move higher before rolling over and dropping. You get kind of that ABC. But this was a pretty sharp move right here, and the volume and breadth was pretty good. There's, had a lot of the leadership stocks that were going. We saw the Russell 2000 start to outperform. Those little things that would indicate that the trend was looked pretty healthy at the time. But again, with those elevated sentiment levels, this isn't too surprising that we've rolled over here. And now, if we don't have to close right at the lows of the day, but if we were to close right where we're at right now, there's a very good chance that this continues to move lower. One of the reasons for that is you can look at this move up right here, and if this is just a retracement for another move higher, usually you're not going to retrace much more than 50%. You can go a little bit deeper, but we're almost completely retraced. We're almost right at where we closed that Monday, which would be pretty bearish, especially if that doesn't hold. And if we close right at the lows of the day, usually if you're right at the lows of the day, right at a support level, usually that support level is not going to hold. Now, a lot can happen. We've seen some of these rallies off the lows take place within even the last 5 or 10 minutes of the market day. I'm not going to be on this update during that last 5 or 10 minutes, but if you see it come all the way back up, and it doesn't have to go, obviously it would have to go positive. It'd have to move above yesterday's close, which is very unlikely. But even if it comes up, 3/4 of the way, you'd have to expect that there still could be a bounce. But if that were to happen, I still would expect the bounce to be more temporary, meaning it could be that this was the start of the move down. This was wave A, this is wave B, and maybe we do rally, try to rally a little bit over the next couple of days, creating wave C, and then you get a much bigger move down after that. So those are all things that I'll be looking for in the next day or two. What I'd rather see happen is to kind of get it over with, have kind of a panic sell-off, not a huge panic sell-off, but there would be some panic selling if we were to start breaking below that Monday close. And even if we got down below the Monday lows there, but get that kind of a flush out move, get that fear back in the market a little bit that you can kind of rally off of. And then I think we'd be set for a more established rally at that point. So we'll see. But there are a lot of things pointing to, more downside pain. We'll look at the VIX here in just a second. You can see that it spiked up today. And again, that's something I want to see if that closes near the highs of the day as well. Does that fear stay elevated into the close? A lot of times it's been fading a little bit right at the close. We'll see if it stays near those highs, the highs of the day there. the Dow already had kind of really broken. You can see here it had really already really broken that uptrend. It was even before that Monday sell, last Monday, not yesterday's sell off, but the previous Monday sell off right there. But again, it's not as down. It's not down as much percentage wise as the Nasdaq and the S&P, but it still looks pretty bearish right there. You're getting lower highs and lower lows in the behavior now. And so until you see that broken, I'm expecting that this is going to eventually end up going to a lower low, at least the way it looks right now. Nasdaq 100, we're starting to see. We didn't go to a lower low right here on last Monday, but we are today moving below there to a lower low today. So it's breaking that support level. That's a pretty significant support level, and we're trading below it. Now it could come off of that a little bit, but we've already traded below it, which means it's broken that that support area there. And again, this hasn't sold off very much compared to the other indexes, which is another reason why it probably needs to, and why there's probably more downside as well that we could expect. Now I know everyone's talking about reasons why we could sell off, and you could talk about the bond market, you could talk about the debt ceiling. There's all kinds of little things you can try to point to, but the bottom line is that sentiment. I keep coming back to that because the sentiment is there, that there's not enough people that were too worried about the drop, and it's hard to bottom significantly when there's not that fear. And so, don't worry so much about trying to find out the reasons for why we're selling off. Because if you're on CNBC today, you're probably getting about 10 different reasons. It doesn't matter. What matters is what is actually happening. And that's what we really need to pay attention to and that's why we want to focus on the charts and what the charts end up looking like, and be willing to change. If it looks like we could rally for a few days, we can, or maybe we have a significant turnaround where it looks like we're going to shake all this off and go higher. We don't mind flip-flopping. Our job is not to be psychics. Our job is to get the trend right, and we want to focus on those clues. Another thing I would point out here on the Nasdaq, I've talked about this before. If you can kind of connect the tops of the trend, you can kind of see visually a lot of times when that trend is reversing. Excuse me. So if you kind of connect the highs right here, you can see that we're clearly starting to kind of roll over, and it looks like it's kind of just starting. So there is still potential for that to kind of drop a little bit further there. The Russell 2000, again, this is what was causing me to be a little bit more bullish last week. You can see that rally in the small caps, and that wasn't rallying halfway and then looking weak. It was a real strong rally for most of the week. Really looked like it was going to work its way back up to these previous highs right here. Got the sharp reversal today. Now the Russell's been stuck in this range, and we're not going to be able to. We're right in the middle of that range. So all I would look at here is that with today's move, it's more probable that the Russell moves down to the lower part of that range down here. Now, if it breaks that, then, we'd have to, I think that would be very significant since it's been in that range for so long that maybe we do get a much bigger correction at that point, and a little bit more pain at that point. So keep an eye on that. Go back to the 6-month chart here. Bonds, big move down today as those bond yields spiked up. We were looking at this sideways range that the TLT had been in, looking for it to either break out above here, which last week looked like it was very close to breaking to the upside. Today we've clearly broken to the downside, although we have a little bit of a bullish reversal candle. So we opened down here, traded this low, and we're currently looking to close higher than where we opened. So could it be that this is a little capitulation in the bond yields rising, that we start to see those yields start to drop and see the bond market rally? Sometimes when you're in these sideways ranges like this, I've talked about this a number of times, where stocks, whenever I use the phrase, whenever you see a stock moving sideways, you want to pay attention to the direction it's moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. That's the reason for that is that very rarely do you see stocks move real sideways like this, and then that is the top, and then it drops. It can happen, so it's just very low probability that it'll happen. I have a name for this. I call these volcano tops, because they look like the top of a volcano, at least the way most people kind of draw volcanoes. But sometimes when they're in these sideways ranges, remember what's creating that sideways range is indecision. The buyers don't believe strong enough that it's going to go higher. The sellers aren't believe strong enough that it's going to drop. And so that's what's causing it to stay in that range. A lot of times what it needs is something to change that sentiment. So what can happen in these real sideways, usually it's just with the real flat sideways ranges, you'll get a move below. It'll have a break below that looks like it's breaking to the downside. But what can happen is that actually triggers the buyers. The buyers suddenly, that's now an area, the buyers are waiting for a price that they feel comfortable buying. And that, obviously these other levels weren't enough for them to be aggressive buyers, but you get that break down below, and sometimes that triggers that aggressive buying. And sometimes you'll see the stock rally right back up and end up breaking out after it broke to the downside. Okay. Now, what could be a clue that could be taking place? Well, exactly what we're seeing today. Do we see a bullish reversal candle where people are buying that drop? It looks like there's some buying going on that little drop right there. Now, will it get back above, back into that range? We won't know that for the next few days. Could it get worse? Absolutely. You could have a volcano top where it drops all the way down, and that was your peak right there. But I just wanted to point that out, because that's something to look for. Do we see this snap back and get back into that range, and maybe the bond buyers suddenly became aggressive buyers at that point. So that's something we'll look for. Can everyone hear me okay? I just got a notice that there's a problem with the audio. Usually I'll get a little box that pulls up if the audio's shut out. Can someone type, if you can hear me, can you type in and let me know? Obviously, if you can't hear me, you can't type in that you can hear me or can't hear me. But if you can hear me, let me know, because it might just be one person that's having trouble with the audio, and it might be on their end. But I definitely don't want to ramble on if the audio there's a problem with the audio. Okay, thank you. So it looks like the audio's okay. So it probably is just on that person's end. And if that's the case, I can't take up time trying to figure out what caused it, if it's just on their end. All right, I'm going to keep going because it's recorded, and they can hopefully review the recording. All right. So anyway, that's what I'll be looking for on the TLT. Now again, it could end up collapsing, like I said. But I just want to point that out because that is something I'll look for. I'm not trying to find reasons to continue to be bullish on bonds because I don't really care. But I just want to point that out because that happens. That's something I learned over time that happened a lot. It comes from trading. I've bought shorted stocks or bought puts when they've broken below a sideways range, only to find they've snapped right back. And usually that pain of getting stopped out, thinking it was going to drop and it didn't, you kind of learn that's over time that can sometimes happen. I've seen it happen enough times to where I kind of look for it now. All right, let's go to gold. Now gold is one of the things I was looking at last week is the possibility that maybe it was forming a little bit of an inverse head and shoulders pattern. We saw it kind of near, usually the left and right shoulders will end about the same area. If that is a head and shoulders pattern, it looked like we were trying to rally back up a little bit, but we've moved back down and you clearly have a downward stair step here. Oops, hold on here. Need to erase those. There we go. There's your move down. Here's your corrective move. See, but this is what often happens in the corrective move within the downtrend here. See, this was the sharp impulsive move down. This is more choppy, more sideways. You had the gap down here, so that was definitely impulsive down. Even on this rally, it looked a little kind of choppy here. But you're reaching lower highs, lower lows. You're acting like a downtrend right now. So what could change that? Well, I'd start to look at, here's a little bit of a lower high right here, but that was a one-day move. I'd probably say right here it'd be a critical level right now. That was the last significant lower high. There's lower high, lower low, lower high, lower low. Can it rally back up and go to a higher high? But right now it's acting like a downtrend. It's acting like it was to retest these lows right here and might even possibly drop below those lows. We'll see. But I would say the trend is, at least in the near term right now, is clearly down on gold. Oil, just the opposite. It's been trending up, broke out recently to a higher high, but that is a bearish engulfing pattern right there. Notice how it completely engulfed the highs and the lows of the candle, completely engulfed the entire candle from yesterday. Now, these types of price action moves are very short term, but what that would tell me is in the short term, we should see oil pull back a little bit. Now, maybe it just pulls back and retest the breakout, this breakout right here. And that wouldn't be much of a pullback, but usually with these types of moves, you'll get some sort of a pullback off of them. And now that's significant because one of the stocks I was looking to maybe add to the portfolio today was an oil stock that triggered a buy signal yesterday. But when I saw that candle on oil, I thought, well, and with the down day we're having today, I'm going to wait, because if we do get a little bit of a pullback, I could get a little bit of a better entry price. Or if it ends up being a bigger correction in oil, I'll avoid getting in right at the top and right where it starts to pull back. And I'll show you that stock that I was talking about here in just a second. It was in our watch list. Oh, by the way, and we talk about combining clues as well. So you're getting a bearish engulfing pattern, and you're in the extreme reversal risk range. I mean, again, none of these things can tell you exactly what's going to happen tomorrow, but from that, there's a very high probability you get some sort of a pullback, a little bit of a pullback in the USO. We'll see what happens, but that's something that a lot of times I see that type of combination. I'll do like an overnight put option trade or something like that, where I'll just try to take advantage of that high probability that you get some sort of a pullback off of that. All right. The dollar is clearly in an uptrend. It's breaking out to a new high here. This is a high that we're kind of keeping an eye on. You can see the stair step. There's an impulsive move up. Here's the corrective step, impulsive up, corrective step, impulsive up. So it's acting like an uptrend, higher highs, higher lows. And now it's breaking out. Now, typically a strong dollar is going to be more bearish for commodities. That's something I talk about all the time as well. So it's not surprising that gold is in that pretty clear downtrend. It is a little odd, though, that oil is kind of, bucking that trend. But with that bearish reversal candle and with the dollar breaking out higher, there's another thing to add to the probability that you get a little bit of a pullback in oil off of that little bearish engulfing pattern there. So we'll see. We'll see if that happens. Here's the VIX. You can see the spike in the VIX, and you can see that we're holding that spike so far. Now, this is not a huge elevated VIX. We were up much higher last Monday. But what I think is really going to be important is where do we close? You see here we closed at the highs of the day. It really spiked the next day. Closed at the highs of the day. It opened higher. It ended up, but it spiked the next day. It moved higher the next day. It came off the highs on this day right here, and then the volatility started to drop. So here it closed at the highs of the day, and it spiked the next day. So again, if the VIX closes near the highs of the day today, the market closing near the lows of the day, there's going to be a very high probability to get at least maybe a gap down or a drop again, a little bit of a flush. Could be worse than that, but at the very minimum, you should get some sort of a drop tomorrow. The chip stocks, the SMH, again, usually comparing this with the NASDAQ 100. Now, last week, I was looking at maybe this being wave A, wave B, wave C of a correction. Looked like we were putting in a higher low right there. We had a nice, strong rally for those first few days, very close to breaking out again. And then, obviously, we've dropped pretty significantly here. So, if I were to redraw that, I'd probably say this is probably wave A, wave B, and this is wave C. But I think this move is significant, too, because it broke the trend line. See if I can draw this pretty straight. So we had, and that's why, another reason why I thought that was a bullish reversal right there is because it reversed right on that trend line. But we've clearly broken that now. So now we're still within the retracement range of that last move up. Here's that last pullback. Here's the last move higher. We're still a little bit deeper than a 50% retracement, but that doesn't look like it's going to stop right there unless it came off the lows of the day, but that looks like it's going to close at the lows of the day, which means we're probably going to come down and retest this support area down here. So that's not looking that's another argument to be bearish in the markets. The chip sector is not really, usually it tends to be a leading indicator, and now it looks like it's leading the way down here. The transports are down, but they're not down as much. That's not I wouldn't say that's a significant drop in the context. So we'll watch to see if this still ends up being the low. There's a little bit of support in this area right down into here. We're not quite there yet. But that's something to keep an eye on there. Usually the transports tend to be a leading indicator, and so I would have expected them to be down a bigger percentage. The fact that they're not is maybe a sign that maybe we could have more selling, but maybe it's not going to evolve into a big drop. We'll see. That could change very quickly too. Bitcoin. Now, the big news on Bitcoin last week was that China outlawed it, and and that kind of caused that gap down right there. Again, I don't see a big correlation with Bitcoin in the markets right now. So I'm not spending a lot of time on this. If I do start to see that, the market reacting to Bitcoin, then we'll talk more about it. I have it in the watch list, but it doesn't mean we're going to spend a lot of time on it each week. All right, so that's kind of where we're at as far as the analysis. And from that, especially looking at like a very high probability, we have a little bit further to drop. I didn't want to add anything, and I didn't see any patterns that I liked, except for the ones that are already in our watch list. So we can take a look at those. Before we do that, though, let's go into the portfolio. Let's manage the portfolio because we do need to stop out of a couple of positions here. So PMFT, it's currently at $4.10. Our stop was at $4.18, so we're stopping out of PFMT. So our stop was below here. So I'm going to go ahead and get out of that one. Oops, hold on here. Got to click right on that little box right here. There we go. And it was currently at 410. You got to be careful sometimes with this. Sometimes under the purchase, the sell price right here, it could be off. See, it's saying 426. It's almost always higher. It's at 410 right now, so I could cheat and go with the 426. That's a higher price, but that doesn't do us any good. We can't do that in real life. So 410, I'm going to sell all 600 shares. And now we didn't take the full loss of this because we had moved that stop up a little bit. So it's only, typically we're looking to lose about $1,000, $1,200 at risk in those trades. Because I moved that stop up, it cut that in half. And that's why we do that is not only to lock in gains, if you get that stop up above where you entered the trade, now you're kind of locking in gains, but also reducing losses if it were to reverse. And with it breaking to a lower low, you want to stop out when you know you're probably wrong, and it looks like there's a lower probability the stock is going to go up right now. And if it does, we could always get back in it again later on. But we're going to go ahead and sell right now and stop out of that one. STKS still looks fine. I mean, we can look at these. See, this still actually has a little bit of a bullish reversal candle today. Our stop is down below here. So I'm not doing anything on that one. DDS, same thing. Have a little bit of a bullish reversal candle today. Our stop is down below here, so we're still fine on that. NTLA, we're going to stop out of. The stop was right below here, and we dipped below that. Go back to the portfolio here. So NTLA is at 141.84. Our stop is at 144. So let's go ahead and exit that. $141.84. And we're going to sell 40 shares. Again, we moved that stop up, so it's not as big of a hit as it was entering the trade. Now, again, keep in mind, when the way I'm managing the portfolio, I'm willing to make that $1,000, $1,200 risk. If I get stopped out, I'm willing to take that risk. If that amount is too high, you've got to adjust that. And even if you have a $100,000 account and you're trying to mirror these same trades, but that you're getting upset because you took $1,000 loss, you've got to change your management plan. You've got to make it to where if you get stopped out, it's a $300 loss or a $500 loss, whatever that level is that you can handle, that you're not going to lose sleep over, that's not going to freak you out and make you angry. Anytime you're getting angry over your results of your trades, it's a clear signal that you're risking too much. Well, it could be a combination of risking too much and maybe not following the trend or making mistakes in your analysis. But it very often is a sign that, especially if it's only like one or two losses, you're getting really upset. That's a clear signal you're risking too much. You've got to get that under control. You have to get that risk level, that amount you're losing on the trade, down to a level that you can stomach, that you can handle, because it's not going to work. And that's kind of the last thing that most traders learn, is they have to learn how to control their emotions. And you don't control your emotions through yoga or positive thinking, the power of positive thinking. You control it through action, through actually making sure that dollar amount is down to a level that you can handle. And again, that's different for everybody. I don't know where that level is for you. You've got to kind of find that, where that risk level is. But it's important that you do find that. So I look at this the opposite. I was more than willing to risk 1,000 or 1,200 or so in that range. I ended up with a $600 loss. That actually makes me feel pretty good. That the way I managed that trade, it allowed me to be able to reduce that loss. And we've done pretty well with the way the market has kind of gone through a correction, a couple of corrections here. We're still only down less than 3,000, 2,500. And we haven't had a real strong bullish move in the indexes that can really turn that around. So it's just a matter of being patient. But because we controlled our trade management and our risk management, because we've controlled those areas, we can rebound from this. And we're not overreacting. We're looking at the individual charts, and that the charts still look like they're fine. They don't look broken. No reason to panic and get out of everything if the chart still looks pretty good, just because the indexes are selling off. All right, let's look at HOV. We can turn the signals back on if we need to. Our stop on HOV is down below here, so we're still okay. SENS, this is one that's close, where our stop is below here, and I put a question mark on that one because we weren't yet below that low, but I didn't like the way the candle looked. This looks like it's going to end up dropping below that low. Let's look at the our stop's at 340, and this is at 346. And the candle, but if it had a little bit more like a bullish reversal candle, I might go ahead and keep it. But I think I'm going to go ahead and stop out of this. If for any reason, any other reason, just to give us a little bit more capital that we can get into something else once we rebound. And I want to make sure we have some capital to add SH into the portfolio there. So I'm going to go ahead and stop out of this. 346. 2,500 shares. So this one's going to be close to that $1,000 loss there, but it's all right. Now this could be one that I may, if it can, the larger pattern on that. Let me pull it up again here. SCNS. I mean, I do like it. Still kind of has that bull move, and it just means that this correction may not be done yet. But if it can start to, you do have lower highs, lower lows on this little drop right here. Maybe it drops down a little bit further. If it can spike up and go to a higher high where it looks like this is done dropping, I don't mind jumping back in this thing again. I may put it back in the watch list to tell me if it goes back to a buy signal again, we could reconsider it. In fact, let's go ahead and do that. Let's put it back in the watch list. Let's put in that alert there. All right, RVLV. Now I had a tighter stop on this one where I was just going to use this low right there. I'm still going to hold that. It is down a lot today, but there's a lot of support in this area right here. So if it dropped down to here and rallied back up, it'd actually be a pretty nice inverse head and shoulders pattern. And I definitely would want to stay in it, and if it can do that. But that one's still okay. We'll keep an eye on that one. Now Tesla, we're up on this one, but you get this bearish reversal candle here. Again, that could just be temporary. We're kind of coming back to that breakout area right there. This is one I might just watch this one into the close. If it gets back down to the lows of the day and it's going to close below the low of the previous day, I might consider stopping out. Now we'd be stopping out at a profit, but again, if I could get more to a little bit more of a cash position there. I don't know. I've kind of gone back and forth on this one because I don't want to overreact to a bearish candle, but you start putting in the context of everything, the market looking like it's going to, and I'll look at the market. If the market looks like it's going to close on the lows of the day, the VIX is closing at the highs of the day. If this dips to where it's going to close or looks like it could close below the low of the previous day, I might just go ahead and cash out of that. Because if there's a high probability that there's further to drop and you can recognize that, why not, why lose that additional money? And especially since I can always get back in. If it just says that the market suddenly reverses and looks strong again, I can always jump back in it again. So I'll make a decision on that one. I won't be doing it in class. And the same, I'm going to do the same with this one here, ORMP. Again, this would be stopping out of the profit. But we're in the extreme reversal risk. We got a bearish inside day. Let me switch this to candles so you can see it. This is usually a very bearish. You're going to usually get some sort of a pullback out of that. Maybe it just pulls back to where it broke out right here. But again, we could always get back in it again. But the fact you're getting that bearish inside day at a breakout area right here, a previous high, there's a very strong chance this things are going to drop a little bit there. So I'll probably stop out of that one too. But I'll wait to the end of the market day to make that decision. And then CLNE, bearish inside day as well. This one just barely started to break out. So again, it could just be that it's already back at that breakout area, and usually it's going to drop off of that bearish inside day, so it could be coming back to these lows. Again, we can always get back in it. There's a lot of potential upside, so it's not like we can jump back into this thing if it holds its support and goes back up. But with that bearish inside day, and again, I need to emphasize, it's within the context, with the market, overall market looking very weak and likely to drop. You get a bearish candle like that, that's what would tend to make me be a little bit more proactive in getting out of that trade. Again, understanding that if everything reverses, I can always jump back in it again. Now GDYN, I'm not going to do anything on this one because our stop is down below here. It actually has a little bit of a bullish candle today. SBOW actually is up, one of the few ones that are up, and it's had a nice run the last few days here. We are in the extreme reversal risk, so what I could use as an exit out of this is if we do get a move where we close below the low of the previous day. It's not going to happen today, but tomorrow it looks like we're going to close below the low of the previous day. I'll probably consider stopping out of that one. Again, I'll look at the market conditions and all that as well. Now, remember, this is an oil stock, and we saw that bearish candle on the USO, but I'm going to wait for a little bit more. I'll wait for that close below the low of the previous day. I'll wait for a little bit more. I don't want to just jump out just to jump out, just because oil looks like it could pull back a little bit. ASPN, our stop is down here. I'm not going to do anything with this one. That's a real mild pullback right there on a pretty big down day in the market. So that still looks okay. All right, that's it with those. And our watch list. I'm not going to do too much here. I'm going to go through this real quick. KRUS, SGOC, and a lot of these, especially down there at the bottom of the list, were recent stock-specific class stocks that we found. And like I said, I didn't see a lot of new ones going through that analysis that I really wanted to add to the list. Thought about dropping KOPN. I don't have to drop it. I mean, but I was looking at this last ditch effort right here that maybe it's an inverse head and shoulders, started to move up right here, but now it's kind of coming back down, and looks like it could drop below. If it does drop below this low, now you're probably going to move down to that low, and it kind of changes. It looks less like it's turning the corner, like there was the original reason for getting the trade. It looked like it was turning the corner and starting to move back up. You had this impulsive move up to a higher high. This looked corrective, but this is a great example of, just because the stock looks like it could be turning the corner doesn't mean it always will. That's why we always have to still manage our trades. And in this case, we will wait for confirmation anyway. Never went back to that buy signal. But at the time, I mean, that looked like it, looked like it had impulsive down, impulsive up, went to a higher high right here, corrective move right here. But now it's not looking as great. TGLS still looks okay. I don't see any reason to drop this one. KDNY still looks all right. TTI was the one that we got a signal on. And I still like this chart pattern, but this is an oil stock, and it looks still like this could be an inverse head and shoulders pattern. This looks like impulsive down, impulsive up. This looks like an bullish ABC. Went back to a buy signal yesterday, but here you've got a bearish reversal candle. So I'm going to hold off on this. And maybe Thursday this could look good and we can jump in, but I don't see a reason to, especially if oil pulls back a little bit. I could maybe get a little bit better price. Maybe this thing pulls back a little bit and then I get a higher low right here. So I don't see a reason to jump into this one right now. I think I can wait on this one. Now, sometimes that's a bad decision. We've seen in some of the examples in the past where I waited and those stocks exploded. I can't remember off the top of my head, but there's been a couple of them where I waited and it ended up being, they would have been phenomenal trades. That's trading. You have to make judgment calls sometimes. Sometimes you're right. And on the flip side, there's been some that have held off and it was a good decision. They dropped dramatically in some cases. So you have to kind of balance that out, realize that both are going to happen. We're not going to get this perfectly right all the time. GameStop still looks all right, but no confirmation yet on that one. BGFB, same. Now CEIX also got a buy signal, but again, it's in the oil sector. I'm going to hold off on that one as well. DAC still looks fine. EDRY has a buy signal. What I don't like about this one, and this is one that I want to wait for a breakout right here, because I don't like this sharp sell-off right here. It broke a trend line right there, and then it's rallied back up. But the whole market did that, where we sold off, and then we looked like we were rallying back up, and then we dropped again. Now this hasn't dropped yet, but I'm going to feel a lot more comfortable buying the breakout on that one if it can break out. And there should be plenty of room to rise. When you break out of a move like this, you could take the depth of the move of the correction, project that upward. That gives you kind of a minimum expectation or target for that stock to move towards if it can break out. So I'm not too worried about that one. This one still looks good. IKNX. Alcoa, kind of same thing. I had a nice move yesterday. A little bit of a bearish candle day right at the breakout. We can wait for this to see if this breaks out. EDD, not the greatest looking, but I won't boot it out today. Same with MG&I. A pretty big down day today, but now let me go back to that one here real quick. MG&I, because I was looking at this being the bottom, this being impulsive, this being corrective, and this starting to take off. Now it's coming back down. It still could be that this is in a sideways range, but if it breaks lower here, I might just, or dips down too far, I'll probably just boot that one out. ALTM, yeah, it still looks all right. And then I put this one back in case it goes back to the buy signal. All right, so what are we going to do with the portfolio? Well, let's go into our inverse ETFs. And this is another reason why I think the market has a little bit further to drop. Let's look at just the chart pattern here. This looks really bullish to me. You had lower highs, lower lows. You had this break up to a higher high. It's pulled back, giving us a higher low, and you have a nice bullish candle right there. What's the problem with that? Well, this is the opposite. This is the inverse of the S&P 500. We're looking at the S&P 500 chart upside down, basically. And so if you're grasping at reasons why you still think the market's going to go up from here, or there's a stronger probability that the market's going to go up from here, this would be a big argument against it, because this looks very bullish. And even with that S&P chart we went over earlier in the update, that looked bearish. We were looking more like it was rolling. Things were rolling over and moving, looking like they were going to move down. So now I bought the SH in the portfolio right here, or one of these days, right? It was right in that area. In case it moved higher, I ended up stopping out of it. Had a real tight stop on that one. I'm going to go ahead and buy it again, and I'll put the stop right below here. Because if it does drop below there, that would look less bullish to me, which means it would be more, the market would be more, the S&P 500 would be more bullish. This would look more bearish at that point, which means the S&P would look more bullish. Now, as I mentioned before, when I was doing the training on these, you got to be careful that we don't want to be in this for a long period of time. The way these inverse ETFs and these leveraged ETFs work, they don't allow you, if you hold them for a long period of time, they actually don't hedge you very well. They don't make you very much money. You want to get in them when you're expecting kind of an explosive move. So I'm expecting that the market, if it's going to drop, it's going to probably drop over the next few days. And so I'm probably only going to be holding this for a few days as it kind of makes that, if it continues that sell-off. As soon as it looks like it could start moving sideways or start rallying back up, I want to get out of this trade so it doesn't, because it'll start being less effective. It's not going to go up very much at that point. I want to only trade this for expected explosive moves. All right, so let's add this to the portfolio. Let me get my stop in. My stop is going to be below this low, which would be the low of the 23rd, $14.70. We could even drop that down to like 14.65 or something just to get a little bit below that, 14.65. All right, so it's at 15.40 right now. Let's add to portfolio. I said 15.40. That's 15.04. That's what I meant to say. Stop at 14.65. I did 100 shares. That's only, okay. This is the mistake I made last time where I ended up, said I could do like I could do like 2,000 shares to get my risk amount down here, down to a level, but we ended up having $30,000 into the trade. I don't want to do that. So, what I'm going to do here is take the let's say about 9,000, divide it by $9,000 would be what I would want to. I wouldn't want to allocate more than that. Divide it by the 15.04 price of the stock. It should tell me about how many shares. I could get about 600 shares. I don't want to have more of an allocation than that. So 600 shares. So we're going to have very little risk in this trade because by that size of the position where our stop is, we could actually move our stop down a little bit low. I don't see a reason to do that though, because if it drops back below that low, I'd want to be stopped out. But we're only risking $234. There's a lot of upside potential on this versus very low downside risk right now. So let's go ahead and purchase, go to my portfolio. Now, understand though that if this is going to go up, that means that the other stocks in the position are probably going to go down, and we have a lot more stocks that were long than that. But if I have to stop out of the other positions, I'll stop out when they hit our stop levels. And if the market sells off and this goes up, then at least we'll have something that's making us a little bit of money. And I just want to just show you an example of how you can use those inverse ETFs as a hedge too. So some of you may not even know you could do that. And you never wanted to short stocks because you didn't understand it or it seemed too risky to you. And it is more risky than buying stocks. And here's a way that you can actually profit from the market dropping without being short the market. You can actually still be long the market. So, all right. Let's take a look at one last peek at the S&P 500. See, we are coming off the lows a little bit. But even then, that's not enough to where, I mean, where there's still not a chance we can drop lower. It would need to be three quarters, at least three quarters, which is probably up in this area right here. But I'll watch for that going into the close. See that it rebounds significantly. And even if it does rebound significantly, it could just be that this is wave A, wave B, and we do get a little bit of a rally up here, and then we drop. So it could just, I still wouldn't be bullish on the market yet. And let me look at the VIX too real quick. Yeah, it's come off the highs a little bit there too. All right. Hopefully that helps. We'll see you on Thursday for the stock specific class. Bye now.